Good afternoon, good morning, good day, and greetings to everyone from whatever part of the world you are at. I am going to skip the whole Happy New Year situation and jump in to exactly what I wanted to talk about. So, I will be making a weekly outlook for the following week, which is the second week of January and the second week of the year, even though it is not the best time to start the trading for the year. For those that are curious to know when ICT recommends or when I feel might be best to resume the trading that you've been having from 2023, I would say it's from the second week of February 2024. So let's jump straight to the dollar index as we do. With the dollar index, starting off with the monthly chart, I had been paying attention to the inefficiencies that we have above price at the moment. So on the monthly chart, we obviously have this balanced price range here, where there is a fair value gap in the form of a buy side imbalance on the left side and another one here on the right side, which is obviously a sell side imbalance. So I was looking to see if there's a possibility of us trading up into that and trading lower from there, because at the end of the day, despite what we may think, price is only moved by inefficiencies or liquidity. So in this case, we have an inefficiency in a form of a fair value gap in this area. We also have liquidity in the form of a sell side residing there and there. I'm not going to draw them out on this time frame. I'm not going to draw them out at all on this chart, because that has nothing to do with my weekly outlook yet. So because of the fact that I'm waiting for February to come through, I can't give anything longer term yet. I would rather wait for January's price action to print and give me somewhat of a cleaner direction going into the rest of the year. So going down to the weekly chart, we had this sell side imbalance, this weekly CB, the sell side imbalance, buy side inefficiency. We tapped into it and completely filled it up. We actually filled it up a little bit more and went into that, but we tapped into this weekly PD array. In this case, it's a weekly sell side imbalance, buy side inefficiency, a weekly CB. And if we are going to be reacting from this weekly CB, we would rather wait for a lower time frame confirmation to show us that we are still going to be bearish. Because if we don't react from this place, then the next target would be this inefficiency up there with the relative equal highs. Alright, so for a weekly time frame, we would need a 4-hour confirmation. Well, for me personally, I would rather wait for a 4-hour confirmation to show me that we truly are going to be bearish. And if we are going to be bearish, obviously we'll be targeting this sell side liquidity. And if we go through that, if we show momentum through that, then we are likely to come down to this sell side liquidity down there. So going down to the for our chart for confirmation, I just wanted to quickly pass by the daily to show what has happened in the past week, the first week of the year. First week of the year, we opened up there. At that point, we expanded to the upside, very bullish. We continued to the upside, and we did not clear this liquidity yet at this point. So when we traded lower, came back to it, wicked above it on Wednesday. So Thursday came, Friday, NFP, displaced lower into this imbalance, and then pushing higher back to properly clear these highs and properly tap into the weekly sell side imbalance that we just mentioned now. So we're in a bit of a tug of war situation, if you would, where we have this weekly imbalance and this daily imbalance. Which one would hold price higher or lower? But for me, I consider the fact that higher time frame PD arrays are always stronger than the lower time frame ones. So in this case, I'll be paying more attention to the weekly CB than the daily BC. But that's not the point of this. So let's go down to the 4-hour chart. We see that we clearly have a 4-hour confirmation. Well, the 4-hour confirmation I would like to see, which is the typical 2022 model. We had a sweep in liquidity at that point. So we got a sweep in liquidity as a quick turtle swoop during NFP on Friday, and we got a displacement to the opposite direction, creating a market structure shift at the swing low when we closed below that swing low. That to me was a confirmation for more sell side liquidities to be targeted. For example, this swing low and the one obviously that we mentioned from the higher time frames. So this to me is this is enough confirmation for me to be bearish going into next week, and I'll be paying more attention to this specific sell side imbalance on the dollar index. So I'll be looking at this fair value gap in the form of a sell side imbalance, buy side inefficiency, to possibly see price go lower. My invalidation point should be this swing high, NFP high. But with a breaker entry, I would likely, if this was a breaker entry, I would likely put my stop loss there, which is where I would consider it to be invalidated. But of course, the most logical and what we are taught should be up there, which is the highest point of the 3 candles that created the fair value gap. If not up there, then it should be definitely here. Treating this as an order block, the last up close candle before the displacement down. So putting your stop loss there as your invalidation point should be something valid to me. So I'm going to set an alert. We're likely going to find the high of the week being formed on Monday, but I'm open to anything happening. So set an alert to see when we cross there. So that's all I have for the dollar index. I am bearish on this, and I'm looking for lower prices on the dollar for the swing low and that swing low. Before we do continue on the other charts that I'm paying attention to, I just wanted to quickly point out the fact that we don't have any major events for the US dollar on Monday, on Tuesday, Wednesday, until this point on Thursday. Actually, we do have on Wednesday, we have the 10-year bond auction at 1 p.m. well, 1:01 p.m. and on Thursday is the only time we're actually having CPI come out. No, not this is for the Chinese yuan. So CPI on Thursday on the dollar index, and then Friday we have PPI at that point at 8:30 a.m. So that's all we actually have on the US dollar. So just keeping that in mind, that the higher probability days are probably going to be from Thursday and Friday, but it does not mean that price wouldn't be moving throughout the week. So just a quick thing to point out before continuing to the other charts. One of the charts that I'm paying attention to going from the dollar index is USDCAD. So I'm paying attention to the dollar CAD simply because of the similarity between the two instruments, between the two pairs. I guess it's directly correlated because the US dollar is the leading currency. As you can see, we have similar structure across the board. On USD ZAR, we have a sweep in liquidity, a displacement, and a fair value gap. On USD JPY, we have similar stuff, but obviously the yen isn't as clean as the other ones are. We still have the same liquidity sweep up there and a displacement to the opposite direction. I don't like the fact that we didn't close below this inefficiency though, but similar concept. On USD Swiss franc, we have the same situation going on, a sweeping liquidity and a displacement. But again, I don't like the fact that we didn't close below the swing low or a significant swing low on the 4-hour chart to confirm the market structure shift. I think that's all. I wanted to see, the reason I was paying attention to USD CAD is that I wanted to see a closure because I was paying attention to this, and I traded this actually on Friday after NFP. After NFP, the same situation here, but on the 5 minutes chart, we got a liquidity sweep and a displacement. The moment we closed below the swing low, the market structure shift was confirmed to me, and I set my pending order for whenever we come back here, with my stop loss being at the high that was swept, the liquidity that was swept, which was at this point. So my stop loss was here, and I was targeting the external range liquidity, in other words the 4-hour chart lows. So I wanted to see if we could go for these relative equal lows down here, but of course after moving my stop loss to break even, I was eventually stopped out. So I don't like the fact that we had this massive retracement back all the way to before NFP started falling off. Measuring the range though from that high to this low, we can clearly see we're in premium obviously, but I would like to see where the OTE is. So OTE will basically be where we are right now, and if we are going to remain bearish on the dollar index, I guess it will be down from here, or it should be down from here. Looking at other time frames, I don't see any PDRA necessarily that would be able to hold price down besides the inversion fair value gap like this one here, and on the 1-hour chart this one here. So I don't really see anything solid here, even so this may be one of those situations where if I really do want to trade the dollar index without actually trading DXY, I would take this trade with USDCAD, looking at the dollar index for my entry and confluence. So in other words, when we tap into this CB and possibly get a lower time frame confirmation, or just jump in without confirmation, because this is a lower time frame confirmation from my weekly chart. So I could possibly jump into this looking at the dollar but trading USDCAD because of the thinner spreads. But that's the only pair that I'm looking at for direct correlation to the dollar index, because we can't see anything solid as an entry here besides the inversions that I mentioned. For those that don't know what I'm talking about, I mean, this was the liquidity that was swept. We also got a turtle soup at that point with NFP, and now we have this inversion fair value gap. Looking at this specific fair value gap here, that was a buy side imbalance that did not support higher prices, and we actually broke below, closed below aggressively. Now price is coming back to it. We've tapped on it, we've tapped it already, so we could see a rejection from here. We could see a continuation from here. So this to me has now been considered, is now considered an inversion fair value gap. This is what I'm talking about. So we could see lower prices from here. Again, waiting for the dollar to confirm this idea. It would be nice to see an SMT divergence, in other words DXY tapping into that 4-hour PDRA that I highlighted, while USDCAD does not, fails to make that new high. And I would definitely be taking this pair in as a way to trade the dollar index. So now let's move on to EURUSD with opposite correlation to the dollar index. We are looking at the weekly chart because that was the time frame that we also paid attention to on the dollar index. On the weekly chart, we don't have a buy side imbalance. You know, we don't have a fair value gap in the form of a buy side imbalance that we are rejecting from, but we are rejecting from this bullish order block. We are rejecting from this last down close candle before the expansion to the upside. At that point there, we did reject from there, from the weekly chart. So to see if, to get the confirmation of this PDRA, keep in mind that we've been bullish this entire time and we've been supporting bullish PDRAs. Notice how the bodies of these candles did not close below this buy side imbalance. We've kept Let me just quickly highlight that that's a BC. We've kept the bodies inside of this BC, so in other words, we might see bullish prices from here. We returned all the way back down to this bullish order block. Let me also label this for the sake of completion. So we return to this weekly bullish order block, and we want to see if we could see a rejection from here. For a weekly PDRA, we already know we look for a 4-hour confirmation. On the 4-hour chart, we don't have the confirmation that I would like to see. I would have liked to see a closure at that point. We only wicked through it, so I don't like that. I don't prefer that. I would actually set an alert for when we close above it. In other words, I'm looking for the structure that we just got now on the dollar index, but on euro, obviously meaning the opposite direction. So I wanted to see if we could get a sweeping liquidity at this point, a turtle soup, NFP tapping into a weekly PDRA, which is the weekly order block, and then a displacement to the opposite direction. If we got a closure above this swing high, this would have been a market structure shift, and any return back down to this candle would then be an order block for a re-entry, but we didn't get the closure that I wanted. So we would look to see if during the week we can get a closure above this swing high, a specific swing high on this 4-hour time frame, so I can confirm the bullish idea that I have, of course targeting the buy side liquidity, just like I'm targeting the sell side liquidity on the dollar index. For now though, one thing I wanted to highlight or point out was the daily chart. We also have the possibility of euro Persian liquidity one more time. We could continue to the downside for the sake of tapping into this daily buy side imbalance. Yes, it's a lower time frame PDRA, but we could have one more turtle soup into this, one more Judas swing into this, one more fake out into this high time frame PDRA, which is a daily buy side imbalance. So we could get something like so. So I'm keeping in mind that this could be a possible target because it's an inefficiency in the market, but I'm not favoring this idea. I'm favoring bullish prices from here, and I don't want to see us return back down into this, but I'm open to that possibility. So going down to the hourly chart, actually let's go down to the 15 minutes chart. On a 15 minutes chart, we can see these relative equal lows, this sort of internal sell side liquidity, if you would. I'm paying attention to that because there's a chance that we could just sweep it and continue to the upside from Monday tomorrow and continue to the upside. But of course, we would need lower time frame confirmation for this idea. In other words, a 1 minute confirmation, a shift in the state of delivery, or a market structure shift would be able to tell me whether this idea is valid. Of course, you'd ask what PDRA are we tapping into. We are tapping into a higher time frame PDRA. We have this 30 minutes fair value gap in the form of a buy side imbalance, and of course we have the 1 hour one, which is the major focus of this idea, because we have the consequent encroachment, which is the 50% mark. This blue line is the halfway point of this fair value gap in the form of a buy side imbalance. Notice how right now we are not closing below it yet, we're still sticking above it. So I would like to see us trade below, which is permissible, which is fine, but not close below on this 1 hour chart. I would prefer that, and then like to see a continuation to the upside. I might not trade EURUSD because comparing this to the next one, which is GBPUSD, the pound, you would notice that the pound is clearly the stronger of the two sisters right now. And speaking of the pound, let's jump over to it now. We have similar price action happening from the weekly time frame. We are still supporting bullish price action. We rejected off of this, and notice how the bodies even struggle to trade below the consequent encroachment. I mean, the bodies did not even close below. So this to me was a very strong indication for bullish prices on the pound. And us trading down to this point was a Judas swing for me. Of course, we don't have any PDRA like we did with Euro, any visible PDRA, but we have this weekly buy-side imbalance to work with. So going down to the daily chart, we can easily notice the fact that on Friday, during the NFP Judas swing, we didn't really sweep this sell side liquidity. We got close to it, but we didn't really sweep it. We actually just made relative equal lows. And when you look to the left, you notice that we actually made relative equal lows from this low, this low, this low, and now on Friday. So pound is really the more stronger one because we failed to have a proper Judas swing. But this could also mean that we are just engineering liquidity that will eventually be swept, because retail is taking this as a strong support level right now, and there's a chance that we could trade back down and sweep it. But despite that, I could consider this, because of my bearish bias on the dollar, I would consider this to be just one big SMT divergence, because if we notice here on the daily chart, we closed above this buy side imbalance. In other words, we could find support in this sell side imbalance, being used now as an inversion fair value gap to see higher prices. We could find the low of the week somewhere inside of this. Going into next week, of course, I'm targeting that buy side liquidity residing up there, that swing high. Going down to the 4-hour chart, you can clearly see, actually, let's start with the 4-hour chart. You can clearly see the difference. We did not have a Judas swing, a proper swing of this, a sweep of these lows. We just got close and then rejected from there. Let's delete this for a second. We also do have a market structure shift here, even though on the euro, for example, let's go back to the euro for a second. Notice how we had this swing high and we didn't close above it, right? And I wanted to see a closure. We also do have this swing high. If you pay attention here, we have this swing high right there. But notice how we still didn't close above this one. So even if you were looking at this swing high, we still did not have a proper market structure shift. Looking down there at the time 10, the time side of the ruler, we can see that's on the 4th of January 2024, 5 p.m. Going to pound, this happened on the 4th of January 2024, 5 p.m. We notice that yes, this was not a swing high. The next candle did create a swing high, but notice how we did close above this swing high. We actually have a candle closure above the swing high, making me favor buying the pound as opposed to the euro. The euro might have one more sweeping liquidity at some point, or a deeper retracement before a push to the upside. Something else I also wanted to note while we're here is the fact that besides the fact that we have the liquidity sweep, besides the fact that we have a validated market structure shift, we also have, because of that, an order block. We have a breaker because we did sweep a couple liquidities internally, but we have a breaker there. We have an order block at this point. I guess it's technically this white candle, the last down close candle, the last highest down close candle before the push to the upside. So this, I'll just take this whole thing as our breaker or order block. Some other people might draw it as from here, draw it out and label that as an order block. Basically, what I'm trying to note is the fact that this candle is residing inside of the daily inversion fair value gap, which is also inside of this 4-hour imbalance right here, this massive 4-hour buy side imbalance. So we could find price trade lower into these levels somewhere inside here, and then retrace. But I'm specifically paying attention to the bodies here. I'm paying attention to these equal bodies. If you can draw out a line from there, pull it out, I have a strong feeling that we're going to reverse from there. Continuing to the upside, targeting Friday's highs, and then going through that, we're targeting this high from December 28. So I've set an alert at that point to let me know when we get there, but that's what I'm looking for. This would be my trade idea for the dollar. This is what I'll use primarily for the dollar going into next week. The other one that I'm looking at is the Aussie. So I'm looking at AUDUSD. Again, let's start off with the monthly. I actually posted a little post on the channel on the Aussie in December and what I wanted to see from here. And I was looking at this weekly bullish order block. I believe I also looked at the 9-day and 9-hour chart. Yeah, I was looking at the 9-hour chart and how I wanted this to hold up price, and I was actually holding it. I took profit at that point when we're close to sweeping the buy side liquidity, and notice how buy side is basically two relative equal highs. So seeing this retracement made me believe that they were just raiding the liquidity. They were just tapping out those people that have been holding like me, but I took profit already to come back down into this higher time frame PDRA. In this case, it's a buy side imbalance right there, a BC. So we have a fair value gap there in the form of a buy side imbalance. After sweeping all these liquidities, these internal liquidities, sweep into it during NFP, having a rejection. Let's go down to the 4-hour chart, having a rejection stronger than the last few weeks on the Aussie, creating some level of a market structure shift on a lower time frame. Yes, we have a swing high again, and yes, we did not close above it, which is one of my many concerns about trading this buyers. I'm not going to be risking the entire farm on this because again, we did not get a solid closure above the confirmation time frame. We have a reaction off of the weekly and the daily, but we don't have a confirmation on the 4-hour like I would like to see. Also notice how we have a fair value gap at that point there in the form of a sell side imbalance, so they could possibly use this to reverse and continue down. So anything is possible, which is why I would like to see a proper confirmation for me to validate my bias here. Going down to the 1-hour though, similar to the pound, we do have a market structure shift, we do have a confirmation, and we do have the possibility of us rejecting from here and continuing to the upside. Of course, if I was trading this, my invalidation point would not be the swing low from NFP, would likely be this low right here, and then hold it up for this trend line that has been forming. If you can just imagine some sort of trend line starting from up there, and just imagine some sort of trend line there that retail traders would be looking at to possibly hold for hold for lower prices. So I believe we're going to get some sort of low resistant liquidity run after now that we've swept liquidity and displaced the opposite direction. I believe the move to the upside is going to be sharper than the one that we took coming down, something like that. This is what I'm looking for on the Aussie, which is another one that I'm going to be trading. So I'll be trading the Aussie and I'll be trading the pound. Not likely going to trade the euro, and I'll only trade the USDCAD when and if I see a lower time frame confirmation. So this is all I'm looking for going into next week. Let's move on to the indices. So starting off with the NASDAQ monthly chart. Actually, you won't be able to see much here, but let's use the continuous contract. On the monthly chart, we have this all-time high, right? This buy side liquidity clearly outlined there. I would like to see if we can sweep this all-time high. That's my short version of the bias that I'm looking for going into next week. Going into the next few weeks. And I'm also highlighting this monthly or bullish order block because this was the highest down close candle before the expansion to the upside in December and of course January now. So I would like to see if we could tap on this, then continue up. But we don't need to do that. We don't need to tap on this order block before continuing to the upside, because when we go down to the weekly chart, you can easily notice how we have this weekly buy side imbalance over there, and of course we do have this weekly sell side imbalance that we just rejected from over there. But my target is the buy side liquidity on top. So the fact that we closed below this weekly buy side imbalance is not really what I would like to see. I would have liked to see, the consequent encroachment of this weekly buy side imbalance. I would have liked to see a closure above this dashed line to show me that we are really strong, we're really bullish and not willing to close below. But now that we close below, still not a trend smash. I'm still waiting to see if we can get a confirmation, which I wanted to see. Again, we have a weekly PDRA. The confirmation time frame is going to be on a 4-hour chart. It's repeating at this point, but I would like to see, I wanted to see a confirmation on the 4-hour because we were extremely bullish at this point and we're trading higher and higher. I wanted to see if we could close above this swing high over there, or even this swing high over there, but I prefer this one because it's cleaner. And when we close above, if we close above this swing high, I would then believe that we can remain bullish probably until the all-time high, this buy side liquidity. If not the all-time high yet, then I was open to the possibility of us rejecting from the daily bearish order block. In other words, looking at this inefficiency here, look to the left of it, we have this massive down close candle. That would be a bearish order block to me. So if price trades back up into this inefficiency, which aligns with the order block, we could see a continuation to the downside, which I'm open to, but it means that we can at least ride it up into that inefficiency. But we didn't get the lower time frame confirmation that I wanted, and I would be very hesitant in trading NASDAQ going into next week. But if I was forced to, this would be my draw on liquidity right now. These relative equal highs, which I also highlighted on a higher time frame, this would be my draw on liquidity. But I would probably look for a 1 minute confirmation or 5 minutes confirmation, like we are sort of getting, but I'm still not the most confident with this confirmation. I don't like the deep retracement that we had after NFP, because this was NFP's displacement, NFP's sweeping liquidity, turtle soup, whatever you want to call it, and we got a breaker actually form over there. We got a breaker form with a 5 minutes fair value gap in the form of a buy side imbalance. So we tapped in it and started rejecting and pushing higher. We got a retracement at this point, pushing higher. So I wanted to see a continuation, and I did not like this deep retracement all the way back to where this breaker happened. Essentially, I did not like that we had to retrace all the way back here. So it makes me a little bit skeptical about this trade idea, and I'm possibly not going to touch it until or unless I get something solid. But again, I've already mentioned where my draw on liquidity is, right there. I would say my invalidation point is here, but we are likely going to sweep it again and tap into the monthly bullish order block that I also highlighted right there. So that's something to keep an eye out on. The same bias goes for the A-mini S&P 500. Of course, here I'm open to the possibility of us not taking the all-time high, but that's my draw on liquidity, all-time high. The buy side liquidity residing there, and you can see that we did tap into the same monthly order block that I highlighted on NASDAQ. So we've already tapped into it. We do have the possibility of of us trading a little bit higher, and then next month, in the month of February, we could find the low of month inside of this monthly fair value gap before taking the all-time high. But that's for next month. So going into next week, I already paid attention to the fact that we are rejecting off of a monthly bullish order block and a weekly fair value gap in the form of a buy side imbalance, rejecting from the consequent encroachment, the halfway point of this buy side imbalance. So keeping all these factors in mind, I would obviously like to see a lower time frame confirmation. On a 4-hour chart, we do have a displacement to the upside, making this to be a bullish order block. We had a retracement and retest at this point, but we dig down even deeper, similar to the NASDAQ, not making me too convinced with the bullish idea yet. But I am bullish on the E-mini S&P 500, especially the E-mini S&P 500, because of the fact that it's stronger right now than the NASDAQ. Going down to the 1-hour chart, we can also see the deep retracement that I was talking about, and the one that I did not like to see. I'm again targeting the relative equal highs up here, but keep in mind that we have the same daily bearish order block over there, because we closed below it, so it becomes a daily order block, and we could reject from here, pushing lower. This could end up becoming an inversion fair value gap next week. We don't know, but if I'm bullish, if I'm bearish on the dollar and I'm bullish on the indices, I would like to see a displacement to the upside for confirmation. I am not confident trading any of these right now, any of these indices right now, until I see a solid confirmation. I think I'll be content with the currencies that I've already shared, but I'm still bullish on this for now, at least for next week, and I'm bullish on the foreign currencies and bearish on the dollar. I am not going to be tackling gold next week because, again, it's not the cleanest price action right now, even though, yeah, the direction seems a bit clear, but similar to silver, bearish. We came from the weekly inversion fair value gap one more time and rejecting again from it. So yeah, even though the direction seems clear, I'm not going to be touching any of them right now. So anyway, I hope that's enough of a recap, and I hope I covered everything anyone might be needing. If you have any questions, if you have any suggestions, if you have any inputs, if you have any pairs that you would like me to cover, if you have anything at all to add or remove, please feel free to share your suggestions, your opinion, your ideas in the comment. But for now, stay safe, good luck, and good trading.